Guys, welcome to our compliance conversations in the midst of COVID-19, hosted by ILSA Inc. and Arleen, or Spot on Insurance. Today we'll be covering cybersecurity, from protecting your systems to ensuring you are in compliance with the DOI's requirements.
So that's like two huge things. So hopefully we'll be able to cover a whole bunch. Thank you everyone for participating. This is a 1-hour session. All of your mics have been muted. However, you're able to type in your questions in the Q&A or in the chat. Sabrina, in the chat, right?
In the chat, either way. I'll get it either way.
So that young lady there is Sabrina Slater, and she is our chat manager. So if you just want to say hello, you can just type that in the chat. So
okay, our guest panelists are Joanne Gatto, Vice President, Education and Compliance at the Surplus Lines Association of California. She's barely missed one of these. I mean, you've been awesome. Thank you for joining us again. Paul Feather, CISO for Renaissance Systems, Inc. And Fred Karlinski joins us today as well, co-chair, Insurance Regulatory and Transaction Practice at Greenberg. How do you say that again? Greenberg Traurig. And I know that name.
yes, because we've done a lot with you guys. And our ILSA participants are...
lest I forget, Russ Foster, who's General Manager and former IT Manager, and Elaine, Nance, who's the Marketing Specialist at ILSA. Our chat manager today, as you heard before, was Sabrina Slater, and she's the Manager of the Annuals and Corporates Department. She makes a great chat manager too.
Yeah, so we're going to jump right into it. I know Sabrina already has some questions, and so we'll start off with that and then just jump into the topics because we have a lot.
Okay, sounds great. So let's first start off with Elaine. Can you kind of tell us how ILSA became involved in cybersecurity compliance?
All right, sure. Well, of course, we've always been aware of the needs for cybersecurity in the insurance industry. We are a highly regulated industry, but really it was when New York passed their cybersecurity law. It came out, and I believe it was March of 2017. And as we do with any new regulation that comes along, our company sat down, our leadership team, and said, how can we help our clients meet this new obligation? And so we really studied the law carefully and looked at it, and a lot of it was going to be work that had to be done in each individual's. It was creating that cybersecurity plan, doing risk assessments. And there wasn't a whole lot we could do for that because it's so unique to each company. And we looked at what was going to be involved either for applying for an exemption or filing that annual certification that's required. And that was actually a pretty straightforward process too, once you understood, how to do it. So that really just left letting people know that this requirement was out there and when the deadlines were coming up. And so we really said, we just want to offer that as a value-added service for our clients who are licensed in New York. And so we posted bulletins and announcements about that from both the New York Department of Financial Services and from Elaine, the New York Surplus Lines Association, who just had wonderful resources throughout that rollout process. And then really, just as that first deadline for filing for exemptions came along, we said, we want to go one step further. And we're actually going to prepare an email blast and send it to every one of our clients who holds a New York license. And oh my gosh, the phones blew up, the emails blew up with lots of people saying, what is this? I've never heard of this. What am I supposed to do? Does this apply to me? Just tons of questions. And for probably 3 days solid, don't you think, Russ?
At least.
There was a team of us that all we did was answer questions about New York cybersecurity. And it's funny, I guess it's not really wrong to say, at one point we actually prepared a little how-to manual for how to file the exemptions with screenshots of each step of it, because it was such a new process for everyone. And we actually had one person on the phone that said, New York told me to call you and get your guide. So we were really pleased that we were able to help people in that circumstance. And then since then, we've just watched as, that's continued to be, New York was the model for NIC, model regulation, and the different states after that have picked it up. So it's really just about being an information resource.
It wasn't just New York that sent people to us, Silent sent people to us too. So we became experts by accident somehow.
Oh,
Yeah, it happens, right?
I think we've got a lot of fine experts at ILSA, I'll tell you that. And just recognizing it.
Well, as you can all see, we have a wealth of knowledge and background here with our panelists, and cybersecurity regulation kind of affects us all. So what I'd like now is just kind of get an overview from each of our panelists of what they think, or, from their perspective, what is cybersecurity regulation and compliance. So Paul, can we start off with you?
Yes, sure, no problem. So my background is all in cybersecurity and assessments and IT audit and something they call technology risk. So we're all about helping companies reduce risk and mitigate those risks through a process of actually assessing, remediation, and then maintaining that within their company. But the cybersecurity rules, they're such that if you don't have that level of expertise within your company, or an IT person that's either outsourced or internal resources, it is very overwhelming. And it really starts down that path of, I don't even know where to start. And they know they have to do something, but this particular regulation is like others that are very prescriptive, and there are step-by-step procedures that need to be put in place and that can be tested and verified that they're in place. So these kind of things that are cyber related, things like you have to have some good protection of data, protection of all the data related to your customers, good firewalls and things like that. But the different levels, the exemptions, and what you can do with a number of questions helps a lot of the smaller entities. So it's really not that burdensome, but I've had a lot of questions from people that brokers and different folks that say, I really don't even know what they're talking about. I need a translator to figure this out.
Exactly. I'm one of those.
I do that. I do that for a living. I'm a translator. So we call it, our bedside manner. And what we do as a part of our, background as a geek, right, a technologist, we can explain it in layman's terms to help them understand what they really need to do. It's a process, a marathon. It's not really a sprint. It's something that they need to put in place for their own benefit and for their own security of their customers' data.
Awesome. Fred, would you like to kind of tell us about your background and how cybersecurity has affected you?
Sure, absolutely. So thanks for hosting this, and thanks for having me. Again, Spot On Insurance has been fun to do, and this seems like it'll be a lot of fun as well. So I am an attorney, as was mentioned. I'm with the firm Greenberg Traurig. We've got about 2,300 lawyers all over the world, and I am the co-chair of the Insurance Regulatory and Transactions practice. I've been doing insurance regulatory work now for almost 30 years, which is pretty scary in and of itself. But what we do in the cyber world is really multifold. And so if you think about it, insurance companies have a lot of PII and PHI, personally identifiable information, and personal health information. They have that on their customers and consumers, but also their employees. And so insurance companies are a wealth of information that can be stolen if the right safeguards are not put in place. Secondly, and equally as important, insurance entities are the ones who in large part have and bear the risk if they're writing policies for the peril of cybersecurity breaches, then they're ultimately bearing at least some of the risk if there is a data breach or any type of cybersecurity breach. And so we have been advising insurance companies really since cyber became an in vogue issue. For those that aren't aware, for those that stay up at night thinking about cyber and worrying about cyber, it is one of the top things that CEOs and others are concerned about as it relates to a company. The second thing normally that's mentioned is regulation, but cybersecurity is really a huge issue because in a lot of ways in the cyber world, we talk about the fact that it's not a question of if, but it's a question of when. And when I usually give a cyber presentation, usually they're in person, although I've enjoyed the Zoom world we've all been living in for the last 90 days. But normally I ask people in the room, I say, show of hands, how many of you all have been victim of a breach? And typically about half the room raises their hand. And I say, well, in the cyber world, we say a couple things. And what we often say is that there are two kinds of people in the world. There are those that have been breached and know it. And then there are those that have been breached that just don't know it yet. And so that's sort of the fact that it's not a question of if, but when, no matter who you are, no matter how your systems are, it really has been intriguing to me. And so what we have done for insurance companies and what we call insurance-related interest brokers, agents, folks that have contracts to service insurance business, is we have advised them on the regulations such as the New York DFS regs, such as the NAIC data security model and rules, such as CCPA, California Consumer Privacy Act, or GDPR in the European Union. And so we have advised them on how to comply with those and how to make sure that their agreements and whatever they're doing is in compliance with that. And the one thing I'd say to everyone on the phone is, or everyone on the Zoom, if you will, is that if you take the premise that I gave you, which is not a question of if, it's a question of when. And I firmly believe that. I think everyone in the cyber world believes that as well. Then there's a couple things that you need to consider that to me are critical. The first is an adage that I've lived by for a long time, and that is if you fail to prepare, prepare to fail. And so you really need a system in place. The time to deal with the cyber breach is not when you're having a cyber breach. And so under the New York DFS rule, under the NAIC model, under the states that have passed something akin to or exactly as the NAIC model, if you're an insurance entity or an insurance-related interest, there are certain things that you need to do, in some cases up through and including to the board level to get where you need to be in terms of compliance. And so how you deal with something going into it is going to be looked at in a certain way by the regulators. And then equally as important, how you deal with something when there is a breach is going to be looked on very importantly by the regulators. So that's very broad and general, but I think a good answer to your question about what I'm dealing with in the world of cyber.
Yeah. I can't wait to get Joanne's perspective because Joanne is a California regulator now, but in her former life, which wasn't that long ago, she was with a major carrier who owned many agencies. So can't wait for you to jump in, Joanne.
Well, and I really think that Paul and Fred both did a really great job kind of providing that overview. When we look at the California or CCPA, right, because that's a lot faster to say, essentially CCPA is just taking an even broader view. So I feel like between the New York regulation, GDPR, CCPA is just growing it out even more. Further, it's really impacting what we consider our insurance, our membership, from the standpoint of it can apply to brokers either directly based on a pure income value or indirectly. And then and indirectly because they fit the definition of what we would call a service provider, which pretty much any broker would wind up falling under. Thirdly, we look at it as really a responsibility. So as Fred has already said, you either know that you've been breached, or you've been breached and you don't know about it yet. So what we're looking at is as well is more on the level of social responsibility as a company that is collecting all of this information. So having like formally come or had worked on the East Coast, I'm most familiar, of course, with New York's regulation and all of what they've tried to work on for their brokers over at Elaine, and trying to help them to become more conscious of the regulation, better prepared to implement it. And I'm going to say trying to stay one step ahead. So California rolled out effective January 1st. They're still in the process of finalizing those regulations, but the enforcement begins July 1st. So we're seeing a large upswing of calls from our broker members to figure out how they can ensure that they're complying. The law is very gray when it looks at like a wholesale brokerage and how it applies, but of course it applies under that service provider model, and I'm going to say under the good business rule that we should all have in place. And we're really trying to look at, even from a California perspective, how we can provide better support to our members as they start to undertake this process.
When is the department going to California? Are they going to be doing like virtual training sessions for the California brokers? Because I mean, for us, for ILSA, most of our clients are licensed everywhere, right? So they've had to be complying with New York. But there's lots of agencies that might just be in California or in the West Coast. So this is new territory for them.
Yeah, and we will look at, so as far as the Department of Insurance, I'm not aware of training programs that they're specifically sponsoring. There are resources that are available. So a business can find information and resources. We are looking at trying to implement some training for our members. Unfortunately, it does not come in timing with this July 1st enforcement, as we were hoping that we would have really the final regulation there to kind of train around. But we will, as we move into third quarter, putting some training together, because it is going to be really important that we all comply. And in the world where now more and more is virtual, it's just more, it's really a matter of just when it's going to happen. So,
speaking of resources, Elaine, you kind of mentioned earlier, unfortunately we were just like, we have all these clients, we have all this new big huge requirement in New York, and they're like, what's going on? What do we do with this? You wrote several articles, you've done a lot, extensive research. What do you tell our clients every day when they ask these questions? Like, what resources are you providing to our clients?
Well, like I said, we provide information, like for example, when somebody comes to us, either when they ask for a license in New York or we renew a New York license for them, we always have information that goes out with that license application or project, request that sort of lets them know that this regulation exists. Of course, as I say, we have a lot of articles on the ILSA website about this, so that we're sort of keeping it in front of people's eyes, because that's one of the things here, and particularly for a lot of the states that have rolled out a version of the NAIC model law. New York has that requirement that individuals and business entities certify compliance or have an exemption in place that relieves some of those requirements, but not all of them. And they have to certify that annually. A lot of these other states, there is not a direct call for the individual or agency to file a certification document. Now, that doesn't mean you're not exempt from the regulation. There's just not that, every year you've got to sign something saying you are. And so that can actually, I think, and Paul, I know you and I have talked about this a little bit, and perhaps you want to comment, not having that requirement to file can actually make it easy for that to slip on the back burner.
Exactly.
With all of the other things we do. So it's really about just keeping this in front of people's minds, because it is so important, and we all want to be good stewards of our clients' information. That's important for all of us. And so it's just about providing people with the tools they need. And one of the things that I did today to tie into this podcast we're doing is we have a new article on the ILSA website that is specifically resources for cybersecurity regulations. It includes links to the different departments of insurance that have created a specific site that's a resource center for their cybersecurity laws. For states that haven't spun that up, perhaps because their implementation date is still out a bit, it's a copy of their law so that people can read through that and sort of see what is required of them. And so, Russ, I don't know if you want to take this time, you maybe show them what the website looks like and where that is.
I was just going to ask Russ. Yeah, he could share
Segue. I love
Brilliant
that.
minds think alike.
so that we could see all those bulletins.
Open up for sharing.
And Elaine, that article that you just did you publish it on LinkedIn?
I have not published it on LinkedIn, but I believe it was put out on the ILSA feed. They reshared it.
Okay.
I think so.
That should be out there.
And there's the link that's on our resource page. So this is the ILSA website, ilsainc.com. And our newsroom, as Elaine was saying, we've been doing a great job for a long time, but especially now during the COVID crisis, we have been, our marketing folks have just been in overdrive, keeping up with all of the state bulletins, any changes that have been made, temporary accommodations, anything that's going on, it's on this page. And a lot of times they get them on here before the states actually put them on their own web pages. So they've been doing an awesome job. And there's the article that Elaine mentioned. There's a link to that right there. We have this set up so that you can search. You can search by tags. You can search by state. Whatever you need to find that's relevant to your situation, we've got it set up to make that resource very easy to use.
You see one really positive one, Fred State, Florida, just yesterday has a tax rate decrease coming next week.
It's right there. Coming next week.
And obviously, on the surplus line side there, and unfortunately the Surplus Lines Association in the state had to go for the first time, and this is their 60th anniversary. Their meeting's going to be virtual. So I guess we'll be discussing that tax change on a Zoom at some point in time.
There you go.
Keep us updated. Yep.
Another thing that we have available this is all on the open side. Well, our website's not really a proprietary website. It's all open. So we put all this stuff out there for anybody in the industry to use. We have a contact page for all the states. So if you're in more than one state and you need to know how to get a hold of Florida, for instance, just click on there. It's got the contact information, the links, and it's also, if they've got licensee search or any other features on their website, we just set up direct links to those so that you don't have to go hunt it up on their website. The stamping office, if you're doing surplus lines. So all of that stuff is out there. It's available. And we just want to make that available to anybody in the industry. If you're stuck at home, you don't have everything in front of you that you normally have, then this website's great. You want to bookmark it.
And of course, we're always here to answer people's questions as well. If someone has a question, of course, for the people who are attending the podcast today, you have a spot, Arleen, that they can submit their questions to, but they can also reach out to us at ILSA.
Yeah. And even after this webinar is over, you can always send in your questions to ccquestions@ilsainc.com and we'll get those answers to you. So we're ready for more questions, Sabrina.
Okay, Elaine, could you kind of tell us, in our experience, this really wasn't our field of expertise, and we just weren't really in a position where we could help our clients. Can you kind of tell us how you met Paul and brought on, that relationship with RSI?
Mm-hmm. Well, like I say, when we looked at the regulation, really the heavy lifting of this was going to have to be done by the licensees as far as evaluating, creating a plan, implementing that plan. But when we don't have a way to handle that up, I mean, a need that our clients have, we don't like to just leave them hanging there. We want to refer them to experts who that is their area of expertise. And we looked around at some various options and had some people we could recommend. But then we happened to be attending one of the Elaine webinars, which was about RSI. And actually, I'd actually heard from, I think it was Paul before that, RSI had been a guest on the Spot On Insurance podcast. So I was aware of them as well.
Well,
And we went to that webinar and listened to them talking about their product. And I think Lisa in our office, and who's also on the marketing team, and I think both raced to the back of the room to get to Russ and said, these are the people we've been looking for.
We got to call these guys.
Yeah, we got to get a call. We got to set it up because we wanted somebody who could really get into the nuts and bolts, not just of what do you need to do. We could provide that information, but how do you do it?
Yeah.
Because that was the piece that was missing. And so we got on that call, and it's one of the fastest collaborations we've ever had.
It really, really was.
It really was.
RSI is just, everybody that we dealt with is just completely on board with it. As soon as we told them what we were trying to do, it's like, hey, we got this, let's do it. Can you send us something to sign today?
Yeah.
So it really went very well.
Yeah. I was going to say that makes a really big plus because from my perspective, when you get into a place where you need help, you want it now. You don't want to wait on it. And so I get calls all the time. I just need to answer this one question or walk me through this particular piece of the assessment. But from experience, we've done that to make it easy to actually get the assessment started, get through the assessment, to get a good report that drives the activity for remediation. And so they feel more confident in what they're doing to protect the data. It's all about the data. So from a cybersecurity perspective, they have a lot of data in hand and they don't even know that they should be handling it in a certain way or a certain fashion without having somebody like me come in and actually assess what they're doing and then report on it. So that was very easy for us to do. We've been doing a lot of those. I've done probably over the last 3 or 4 months, a couple hundred of those. It really, in all industries, right? It's not just in this industry for this particular regulation, but a lot of different industry regulations. And some of them are more prescriptive than others, and others are more vague. And the more vague they are, the worse they are. So we truly have experienced all forms of those and all levels of those kind of assessments quickly to get the clients, your members up and running and get them kind of going in the right direction to reach some point where you can put a stake in the ground and say, this is where we are, even if it's bad or we need help or whatever, just to know where we are so we can move forward. So,
if I may, one of the things I would say is that even though this may be somewhat Greek, if you will, to the cyber folks on the phone, the folks that aren't necessarily on the insurance side, but are more on the cyber side, the insurance industry has gone to a lot more of these sort of self-assessments over the last couple of years. If you look at what's happened in a lot of ways after the financial crisis, after Dodd-Frank, you now have things like ORSA, own risk, solvency assessment, the corporate governance annual disclosure, CGAD, Form F, and other things that are out there. And now in the cyber world, you've got the same type of thing. So I think having those resources either internally or external, and I would submit in a lot of ways, you almost, even if you're a small entity, you almost have to rely on outside resources. But even if you're a large entity, you really want to be able to understand what's out there in the marketplace, because if you only look at it from the lens of what you're dealing with, I think you're limiting your review of what your threats are. And so I think all of these types of things, whether it's ORSA, CGAD, Form F, the threat assessment, when you're dealing with cybersecurity issues, all those things do require an introspective look. But I think having some external resources that can help you dissect things, let you know that, yeah, everyone else is seeing these same types of things. Because one of the things that we advise and we counsel folks on the cyber side, and I think it's clear from the NAIC model, from the New York reg, and just from practical terms, is not every threat can be mitigated. I mean, at some point in time, there are going to be threats that you're going to have to accept. You may not like it, but that's just the reality. And those types of things, if you're dealing with them in a vacuum, may be hard to appreciate or understand.
And one thing too, I mean, I think it's so important for people to realize is this also isn't a one and done process. You know, every time, for every new security measure people come up with, there's somebody out there who finds a way around it. So this is an ongoing process that you have to constantly be assessing and reassessing, building your body of knowledge, because compliance in this, as in all things, is a moving target.
Yeah, what is it?
Fine.
Is it the hydra that you cut off the head and one head and another one appears?
Yes.
Well, then this is probably a hydra. I mean, at the end of the day, that's a great point. I mean, this is a continuing obligation. Even if you've got a certain report you need to file on a certain date, at the end of the day, the biggest risk you have here, and sure, your data is a risk, and that's important. But if you're in the insurance industry, which I think most of the viewers and listeners are, your biggest risk is your reputation, right? And you know, you might have to pay some claims. It might not be good, but at the end of the day, and so there might be some monetary damage. But at the end of the day, your reputation, and in the insurance industry, reputation is obviously pretty critical, because you've got a promise to pay, which is what you're selling, versus a tangible good. So I think, again, the mantra that I discussed earlier, if you fail to prepare to fail, dovetails everything that we're talking about today.
Awesome. All right, so now I do have a few questions. We'll kind of start off with like on the regulation side. So maybe Fred, Joanne, maybe you guys can chime in on this. Question number one is, does the regulation really apply to producers or just to insurers?
Well, the answer, I'll start if you want, Joanne, and then you can fill in, or vice versa, whatever's best for you.
Yeah, go ahead.
All right, so the bottom line is it does apply to insurers. It does apply to producers. All of these things apply to both of those. It also applies to third parties that you may be doing business with, which to me, and I think to anyone that's practicing in this space, would tell you that's probably the most difficult area to deal with. But one of the things that both the NAIC model and the New York DFS reg have acknowledged, and others have as well, is that there is not a one-size-fits-all, and there cannot be a one-size-fits-all approach. So if you look at a multinational insurer versus a single state, small domestic company, there's going to be different standards that are going to be applied. The multi-state insurer will do certain things and need to do certain things in a certain way, whereas that single state insurer won't have some of those same critical eyes looking at them when they're putting their plans together. Similarly, a significant broker, a multinational broker, is going to be a lot different of an animal than a small mom and pop street broker. And so I think that, and that's not bad. I mean, you know, it's logical to assume that the larger the insurer, the larger the broker, the more data they're going to have, the more sensitive information, the more, frankly, they're going to be a target. Now, having said that, I want to be clear that small and medium-sized entities are just as much a target. When you look at what's gone on in the cyber world, you look at the hacks and the attacks out there, And the bigger ones right now are all nation states. And I'm not going to mention any, we hear about them in the news all the time. And you've got the hacktivists and the folks that want to make a statement. But really, what we're talking about here under any set of circumstances is in large part human error, right? And so a smaller, medium-sized broker, smaller, medium-sized insurer, their CEO could lose their phone, and if it doesn't have the right encryption, that's going to cause a problem. There's going to be some PII that could be lost. There's going to be some PHI that could be exposed out there. And so what I think, no matter what size entity you are, you need to deal with the human aspects of this. But make no mistake about it, the rules and regs do apply to insurers, do apply to brokers and agents, do apply to third parties that are doing business with those entities. But the real stratification is the fact that these are not one-size-fits-all approaches, and there are differences as to how the regulators will look at those entities. So Joanne, I don't know if you want to chime in at that point, but I think it's a good jumping off point for me.
Yeah, no, well, you've stated it perfectly, so I can't add anything to that other than to say wholesale, retail, it doesn't matter what kind of producer you are impacted either directly or indirectly, especially when it comes to CCPA.
Awesome. Thank you both. Now, I do, Paul, just 1 second. Russ, I saw you react to the third-party vendors. You're going to have to chime in on that. I need to know. Inquiring minds need to know.
Well, just to piggyback on what Fred was saying, that's our space. We're a third-party vendor. So, and it really dovetails a lot with what Fred was talking about. We've been doing vendor assessments for our big clients long before the New York law was passed, or the regulations passed, because they recognized those threats. They experienced breaches. They had issues, and so there were standard kind of compliance things that already existed out there for entities that big in insurance and the financial sector. So we got these big, huge, long vendor assessments that took days to put back together and get it back. But once you've done those and you recognize, okay, there's a common thread to what our clients are going to need to know about what we do with their data. And there's also, there's an onus on us to meet those compliance needs to be able to honestly say, we're doing what we can to protect your data. So as the New York law has come in, I've been getting vendor assessment requests from clients that are very small. And sometimes the request is, can you do a vendor assessment and send it to us? Because we don't even know what we're supposed to ask. So we have our little generic vendor assessment that covers everything that they need to be able to go back then and say, hey, we did our vendor assessment, our vendor's good, we're compliant. And it's just something that we had already been down that road, but it's interesting watching it evolve and seeing how the small and mid-sized folks are having to deal with it. And as Fred was saying too, one of the issues that they run up on is most of the small businesses, they outsource their IT. They don't have in-house IT. They are not cyber aware beyond being able to use the tools for their business. And they're very reliant on outsourcing. But if you go to somebody who's typically an IT ops outsourcing vendor and tell them, hey, can you complete this big assessment? And they're going to go, no. So it's really incumbent on them to find folks that can help them meet that requirement. I know Paul can talk a whole lot more about what the vendor requirements are. I can tell you how it's impacted us, but I'll be talking all day about that. But it's very important that they have trusted vendors, vendors who can complete those assessments and meet those requirements for them, because that's out of their hands, but they have to have it. It's kind of a catch-22.
Paul, go ahead. You had something you wanted to say?
I was going to say that it's everything Fred has said is all based on risk. So every entity has risk, and they have different levels of risk for every size and shape and scope of an entity, no matter what it is. For third parties, in the past, I've done a lot of financial institution assessments, Reputation risk is one of their items that they have to have in their audit scope every year. GLBA is one of those other areas that has to be addressed as well, no matter if they're public or not, for financial institutions. And one of the subsets of GLBA is vendor management program, which means that you have to assess by risk ratings of all your vendors periodically throughout the audit period. So that actually means that they have to do a risk assessment against each vendor by their risk. So if it's a high rated vendor, they have to be assessed at least annually. If it's a moderate size risk, then it's like every 18 months. And if it's a low, it could be every 2 years, but all vendors have to be risk rated and assessed. Those assessments can be very lengthy and painful. Some vendors will not reply to those risk assessment questionnaires. They have standardized on some of those. They're called a SIG light or a SIG medium or a SIG full, and they're just standard information gathering questionnaires. So they're trying their best to kind of, get them to be more consistent across all the vendors. There are services that will actually risk rate all vendors across the U.S., and then you actually will apply for a license to have access to all those assessments. So you're not actually sending them out, you're getting data back on assessments that have been performed against those vendors over the audit period. So the assessments that we do for vendors, there are plentiful. We do them all the time. We do them against ourselves because we have to actually reply to people that use us as a third party. They're called third party risk assessments. Bigger banks do them all the time, thousands and thousands of them a year. And it's really to protect the data of the entity. If that data flows through my hands as a third party, they need to do a risk assessment against me to confirm that I'm actually doing what I should be doing with their data. One of the other prime examples of this kind of thing is payroll services. People will use outsourced payroll from companies, and those payroll providers of service have to be assessed and provide reports to the entity that we're handling your data properly. So depending on however many customers they have, some of them are standardized. They can just send the report. We call it a SOC report. We'll send it out to the user community or the customers of that third party. So really it's based on risk. Everything Fred said is true. This is happening more and more of all sizes and shapes of companies, not just insurance, but anybody who has relationships with a third party entity under contract should review their contracts to make sure that there is some form of an assessment process between your third party and your entity.
Rena, I'm just going to pause for 1 minute. I would love to share with everyone that we have actually done several episodes, podcast episodes, around cybersecurity and the New York cybersecurity regulations. So I'm going to have Christian share our page with you so that you can see some of the episodes that we've done surrounding this. So we've done, do you have a cyber coach? We've done wire fraud, extortion, identity theft, New York cybersecurity, the DOI cyber regulations and business risk. So we have quite a bit of episodes around this topic. So make sure that, you know, if this is something that would be beneficial to you, check those out.
Awesome, thank you. Great resources for sure.
One thing I'd like to add before we move off this topic of third parties though, almost all of the states that have adopted these regulations phase in the regulations over time. And so I think it's useful for people to know that third-party oversight is almost always in a later phase. So I think it's comforting to know that the regulators understand that trying to get this information from lots of different vendors is going to be more time-consuming. And so they build that into the implementation of these regs.
That's great information, Elaine, especially like I know a lot of listeners just heard that California's regulation becomes effective July 1st, which is Next week.
So our next question is still on the regulation side. Can I be exempted from the regulation? How long is the exemption good for? And how, if I can file an exemption, how do I file it? Elaine, you want to take that one?
Well, yes, almost all of the states that have implemented these rules have some regulations, components that allow for exemptions. One of the biggest ones that most of the states have is if you are an individual producer, you can file for an exemption saying that you fall underneath your organization's cybersecurity plan. And in New York, for example, I hate to keep using New York as an example, but they've been there the longest and have gotten all of the phases of their regulation rolled out. You file that, it's a one and done unless, and this is the key thing people need to remember, unless you change organizations, in which case you need to go back to that regulatory authority and recertify providing the information for your new employer. And so that's one. Other criteria, it can depend by revenue levels, by size of the company, are common exemptions. But the biggest thing too to look for those exemptions is most of them are partial exemptions. So just because you filed an exemption doesn't mean that you don't have responsibilities. It just may, relieve you from some of the most time-consuming or most costly implementation plans. But you really need to know what that exemption covers, and don't just assume that because you're exempt, you're finished.
Okay. So what are some of the penalties if an agency or individual or anybody that has this requirement fails to comply with this regulation? What are some of the penalties?
The fact of the matter is we don't see a lot of people not complying with these types of things. I mean, they're almost so rudimentary. And frankly, I mean, if you think about it on the cyber side, for example, so everything in the world of insurance or in financial services like the DFS model, they require not only for you to have management involved, but also for the board to be involved as well. So we don't really see a lot of people flaunting these types of things. I mean, I can't think of, certainly we've had people that have had breaches and things have been looked at, but I can't think of anyone who has gotten to the point where they haven't filed any requisite documents where they would have been fined. So I think the good thing is everyone's taking this very seriously. And I think if there's been any penalties, it's not been because someone failed to file paperwork on time, which by the way, most of the departments, I don't want to speak for anyone and I don't want to give anyone false hopes. The departments in a lot of these newer types of requirements have worked with entities to make sure they get them in and that they're thorough. And, CGAD in a lot of places was implemented late. And by the way, on all those types of things, on any of the CGADs or Form F, cyber, and how you're dealing with mitigating those types of things are part of that risk assessment. So I have not personally had any insurer or broker come to me and say, we've gotten this notice from a department where we're going to get fined. We have had insurers and brokers come to us where they had a breach and they may not have had everything they needed to have in place, and therefore they had some regulatory action, but not because of not filing whatever requisite assessments under whatever terms, CGAD, Form F, or otherwise would need to be filed. But let me also just make it very clear to folks that while I think it's really important that we're talking about the filings of the documents and fines and how that all works itself out, realize if there is a breach and certain things happen, that there are other notifications that are required, including in almost every state, a notification, depending on the size, a notification to the Attorney General within that state. So while you would normally think that the Attorney General in a particular state does not have any purview over an insurer, well, number one, they do generally, but specifically as it relates to cyber, and a breach, they almost always do have some contemporaneous type of enforcement activity with their offices. And so that's just something to keep in mind, that when you do have an incident, you do want to make sure that, and again, this is not just your home state or your domestic state, it would apply to anywhere that you have consumers. And so we've not seen, again, an assessment that wasn't filed where there was a fine, but we have seen other instances where there was regulatory action either through the Attorney General's office or through an individual insurance regulator.
Okay, so the next question is really more on the risk assessment cybersecurity side. So Paul, I'll let you take this one. One of the key items in the cybersecurity regulation is informed oversight of the information security plan. What skills or experience are needed to serve effectively as a CISO?
Yeah, that's definitely a loaded question. Truly, I think what I would start off with saying is that the cybersecurity plan is just that. It's a plan for your entity to put in place certain things related to the activities of IT and or the entity with all other employees within the company. So from a CISO perspective, all you're trying to do is to make sure that you cover all the areas of known risk that could present itself to the entity and put controls in place or processes and procedures in place to mitigate those risks. So from my perspective, what I do with entities is help them understand what the regulation is requiring, how to put in those controls to help mitigate those risks, be able to test the actual controls to make sure they're working, and then over time have them, realize that they have to do this continuously, that it's something that they just can't put it in place and forget about it. It's not the responsibility of a CISO or a single individual within the entity to actually get this stuff put in place and to keep it working and operationally effective over time. So from my perspective, I'm just a cheerleader, right, within the company, trying to help them do the right things, to understand what the risks are and the mitigating controls that we can be put in place to mitigate those risks.
If I could add to that just real quick, I agree with everything that was just said. I would just say that none of these efforts, none of these assessments are intended to be check the box. I mean, they are intended to be an introspective review. And so if you have a plan that you just take and, change from Fred to Ted, that's not going to fly. I mean, you need to look at it. You need your CISO looking at it. You need management looking at it. And ultimately, you need the board to sign off on it. And that really does need to be a plan that will involve your internal resources as well as external resources. You need external resources on the front end, on the plan, but you also need, the plan involves, the when there is a breach, not the if, but when there is a breach, the notices that need to go out, things like that. And you might need a third-party vendor to help you with that. If you're a big enough organization, you need a crisis communication team on. And again, the right time to deal with all that is not when you're having a breach. And so all these things do need to be, and folks need to be very thoughtful when they're putting these things together. And it does need to be, for lack of a better term, a bespoke plan. It should not be a check the box exercise.
Yep. I'll throw in on that this plan that he's speaking of, this what we call a cybersecurity plan, it does cost. There is some money associated with putting that plan into place. So you do need board approval. You need your CFO to approve it. You need the guy that's going to, write the check, and the budgets for IT and budgets for different things, outsource activities to other third parties. There's a lot of that's included in the plan. Response, incident response, but business resiliency, backups, logical security, physical security, all the different areas of risk that could interact within a company, within an entity, is truly a part of that plan. When you say cybersecurity plan, it could be a smaller plan as a part of a general overview type of plan. So if you have to isolate it, you know, if you have to have a smaller piece to bite off, cybersecurity plan is just a small piece, but you have your disaster recovery plan, your incident response plan, you have your physical security or facilities plan. I've seen people have multiple 10, 15, 20 different plans that roll up into one major enterprise level plan. You know, they call it a program at that level, a program made up of multiple plans.
Well, and I just want to interject for 1 second. I agree completely with what you said. There is a cost to doing it, but there's probably a bigger cost to not doing it.
Absolutely.
Exactly.
I agree with that totally. I've seen those breach numbers. I've had those guys on my panels before, had those conversations, and they always underestimate the dollars associated with the breach in the early stages of it. And then they, from there, try to figure out, you know, where are we going to get that extra $7 million or whatever it is. So it's you should really understand what that breach cost is. Like you said, a reputation risk, but also on, you know, all of the other items associated with response that all have dollars associated with each individual piece of data that's lost.
I just want to put in real quick that what Paul and Fred just said about those costs is you need to remember that it's scalable too. You know, we think about the Target breach, we think about you know, Wells Fargo or whatever, but a small company that gets hit with a ransomware attack, and maybe it's only, you know, 70, 80,000, but that's devastating to them. That's the equivalent of a multi-million-dollar or billion-dollar breach to a bigger company, and harder for them to deal with in some ways, because again, they didn't create the plan. They don't have the infrastructure to deal with it.
Yeah, that's one thing I was gonna. I'm glad you brought that up, Russ, because I wish I could remember the actual statistics, but there was an article I read that said, you know, companies, particularly smaller companies, often say we don't have the resources or the money to devote to this.
To IT.
But they said, you know, you're just as vulnerable if you're a small company, and the impact is larger proportionally on a small firm than it is on one of these big multinational or nationally based companies. It's more likely to take you out, you know, of business if you haven't put those preparations in place. So there are ways that you can do it, not on the cheap, but in a way that's affordable for what your company has to spend. But it's just essential that you do it.
Dennis Logan, he is a longtime visitor of our webinars. He said that the average interruption is 9 days, which is 5% of the revenue. Most cyber insurance policies are much less than that. Keep that in mind. Thank you, Dennis.
And one thing about Dennis is, if you guys haven't checked out, he did a bonus episode, podcast episode with us surrounding COVID-19 and cybersecurity. And one of the things that he told us, this was several weeks ago, so we were still kind of like just trying to deal with all of the COVID-19 work from home. He said the minute that he went to working from home, he changed passwords on every bit of equipment that he had been using at the office, but now he was taking to his home. And so that is a really good bonus episode to listen to, the one with Dennis Logan.
When you're home, you got to be a lot more careful. What was that email that you received yesterday that you were like, this is real suspect?
Oh my gosh. It probably was a real true email, but I can't remember what it was. It was, from Walmart. I got a text.
Said,
oh, wow.
It said basically what you ordered.
Your order is on its way.
And she was like, and just click here. And she's like, did you order something from Walmart? I'm like, no. And she goes, oh, they're trying to get us at home.
Only if it would have been from Amazon would I have known that it was legit.
You know what happens here when our accounting people get a text from me wanting to transfer money, we don't have to worry about anything going wrong.
Yeah, we know that that's not happening because you never text us.
And here it is. Funny story. Got to give it to you. So I actually experienced that with a client, and it was truly a spear phishing, what we call a spear phishing attempt. And they actually, as Fred mentioned, they had no idea that the bad guys were inside the network for like 9 months. And they were very quiet. They were not causing any disruption, just listening. And actually, the bad guys knew their network better than the IT guys knew their network when it was all over. And they actually didn't actually go to where, what we call where the high level guys are. They went to the low level folks that were doing their job and watched them so closely. They knew when they went to lunch. They knew when they took breaks. They knew when they logged in every morning. They knew everything. And within 15 minutes of 11 a.m. for their lunch hour, you know, she was leaving at 11, they lost a sizable chunk of cash just that quick, and it was gone. So by the time they got back from lunch, it had already been 30 minutes to an hour, and it was already bounced across 3 different, you know, Ukraine and all over the place before they got back from lunch, and it was gone. So truly, this is something that happens all the time, and we call it either an entity ending event or an IT guy. It's a resume building event. They probably should not be in IT anyway.
It's a career changing event.
Yeah, career change event. You get out of this because you can't handle it. So truly, it's a painful situation for a lot of companies. I've had a lot of experience with clients that say, look, we're going to have to go out of business. We can't afford this. This is not going to work. And so it's not that it's a penalty. It's just the cost of doing business. They should have or would have rather paid up front to protect a little better than going out of business.
Wow. That just like,
Great
I just had somersaults in my stomach. What a way to end this session. I know that we have like probably so many more questions, Sabrina, right?
Elaine just wanted to say something.
Go ahead, Elaine.
Well, one of the things I was going to say too, it's a scam that we just want to make sure people are aware of too. You know, in the past, you used to call them Nigerian prince letters, where it's, you know, I'll send you a certain amount of money. One of the things that we're seeing now, and it's something people really need to be aware of as a cybersecurity risk, a lot of these hackers and phishing attacks are now coming in the form of COVID relief. So they'll contact people and say, you know, we have your COVID relief, you know, funds, or we have funds that are available to help your business get through this period. You just need to provide us with your bank account information.
Holy moly.
You know, they're using the current crisis that we're all in as an opportunity to catch people when they're feeling a little more vulnerable and, you know, perhaps are in dire financial straits if they've had, you know, layoffs or furloughs and their businesses have been impacted. So just something to be aware of out there.
Guys, this is telling about this whole discussion that we've had for the last hour. I have been sitting here because the upcoming Spot on Insurance, I always use about a minute and a half of something important that was said during this meeting. I've been listening to you characters here, and I am like, which one of these guys am I going to pick for this? It's so good. It's also informative. So I want to thank you all our panelists because you all were excellent. We're already receiving a great praise on what was discussed here, and I think it's important for the industry. Thank you.
Thank you guys so much.
Thank you.
Have a great
Thanks for having us.
Thanks for having us.
Thank you,
I appreciate
guys.
doing this. Thank you.
Bye, Fred. Bye, Paul.
Take care, everyone.
Bye, guys.
Thank you, Fred.
Have a great afternoon.
Thank you, Paul.